Thursday, the 25th of July 2019. Thursday is here, and the crypto market started off a little positively this morning, with Bitcoin running up to just shy of 10,200 and ETH up to 226. And we did note at the end of the day yesterday that ETH was, whilst Bitcoin was looking heavy, ETH was kind of hanging in there, didn't really want to go back below 210. So hard to say, but maybe this was a little bit of an ETH-led move early this morning. However, the battle for direction continues as the market is digesting everything that is Libra, which is still really on everybody's minds, even though the headlines from the congressional hearings have obviously sort of died down and gone away. On the day, not the most exciting of days, a couple of moves up and down through the 10,000 level for Bitcoin, really just oscillating around that level. ETH dropping back a little bit from its highs back down towards around 218. But overall, not a lot of movement on the day. The one interesting headline I did read was that Pantera Capital founder Dan Moorhead reckons that Bitcoin will be worth $356,000 a coin by 2022. I think that is a fairly bold call by anyone's estimates. For today, the market though remains fairly range bound, and no such grand moves on the horizon anytime soon. Thursday will be a lot more interesting on the FX front though. I really would be all about the ECB interest rate decision. Despite some rumours to the contrary, rates were left unchanged. There was a few schools of thought that perhaps, given some of the weaker data recently, that the ECB may cut rates, which they did not. Prior to the announcement, the euro-dollar had hit a new low for the year at around 111.02. And although Mario Draghi highlighted a prolonged period of easy monetary policy and highlighted a lot of concerns around growth and global concerns as well, he did emphasize that there was no discussion around cutting rates at today's meeting. That caught the market a little bit off guard. The market had been hoping for a bit more, and before you know it, the squeeze came. Obviously, the market was sitting rather short of euros, not only against the dollar, but also against other currencies. And we had a very sharp move higher in euro US up to a high of 111.87. And we had euro crosses moving higher as well, two of which I focused on in the past couple of days. We had euro Swiss moving back above the 110 level up to 110.35, and euro sterling from around 89.10 up to 89.45, and euro yen up to a high of around 121.18. It was a real squeeze. No other catalyst really, just in the fact the market was just wrongly positioned, I guess, for that particular comment. And that's all it takes, one comment, and off we go. US stocks have been looking at a positive open, but they too reacted to the lack of ECB action, plus also a sharp drop in shares of Boeing. Quickly reversed the opening, or should I say what the futures were predicting, quite a strong rise for the Dow Jones. It's supposed to be up about 100 points on the open, and ended up actually opening up down on the day, probably down by about 50, 60 points. Gold also had a bit of a swing as well. It initially rallied up to a high of 14.33 prior to the ECB announcement, but with no change in rates, and the fact it wasn't discussed at all, dropped back down to around 14.15. As Europe goes home around the sort of midday New York time, the squeeze that was now started to reverse, and euro begins to drop back down, goes all the way back down to 111.30. Dollar yen gets up to 108.70, going the other way. Sterling falls against the dollar down to 124.30. Aussie down to 69.42, and dollar CAD up to 131.70. So really a dollar move there, as much as anything, but highlighted obviously by the fact that the euro had come back down 50 or 60 points from its highs. Equities do recover marginally off their worst levels, but the Dow Jones ends up closing lower by around about 0.47%, and the Nasdaq down by 1% as the tech sector falters ahead of some earnings releases coming up. And I can tell you, actually, as I record this commentary, that Amazon actually had their earnings out, which came in a little worse than expected. Stock was down around about 2.5% after the data came out. So that should have an effect on the market a little bit going into tomorrow. And that's it around the market. There's some technical analysis. I figured, given we had so much focus on euro today and euro dollar in particular, I found it only appropriate to look at the technical picture, which we have touched on before, but certainly important to look at it again today. In front of you, we have a daily chart here, which goes back to April 2017. So, a good 2.25 years ago. What we have here is over the past 24, 48 hours, we had this initial support here at 111.80 area, which, as you can see, kind of broke through there. And then today we had the move down to, as I said, it was a low of 111.02. So we really challenged the support line, which not only goes back to May of 2017, but also was challenged once back in April of this year, and then again back in May. So a very, very strong support line. And given if this had been on any other day, a break of that support line, it might have seen a real gathering of momentum. But because of the timing when it did it, and the rate announcement coming out, and Joggy's comments, it was enough to save it, and we bounced back up again. But it's fair to say, going forward, this is, I call it the line in the sand, but it's a very important level. And if we can get below, say, 111, I would expect to see some momentum. Especially today, given the fact we'll be after the squeeze, we came back off again. It suggests that the market still has an overall appetite to sell euros, and the interest rate outlook for Europe is certainly pretty dovish. Just because they didn't move today doesn't mean to say they won't at the next meeting. And that's pretty much it for today. So I hope everyone had a good day trading, and the volatility didn't catch you out. And I look forward to speaking with you tomorrow. Cheers.